Well, guys, it's been a wild ride with SoFi stock, but is it time to keep buying more and load the boat, or is there big problems ahead for SoFi and you should be more defensive? Well, I'll give you guys the 3 reasons I'm personally still looking to buy SoFi stock, but I will also give you the 2 big problems. So that's not 2, that's 3. That's 2. 3, 2. There we go. We got it right that time. Anyways, I'll give you the 2 big problems with buying SoFi as well, because you have to understand not only the risk, right, but also the rewards. You can't just say, oh, everything's great to the moon. There is no risk. No, there is risk with this stock, just like every other one. So make sure you like the video if you like getting the truth out the hype, and hopefully I can get 2 versus 3 right as well with the handbook. I don't know, maybe not. Who knows? We'll see. All right, so let's talk about the first reason I'm buying SoFi stock, and that would be earnings performance. Now, look, I can tell you guys with absolute certainty, you would be hard pressed to find 5 other companies, if you could find 5, that had better earnings performance the past 3 years. Basically, beat and raise every single quarter for 3 years. You'd be hard pressed to convince me that you found more than 5. You found some that have had great recent earnings, great earnings the past year, but consistent beat and raise for basically 3 straight years now. That has been SoFi. That speaks to an incredible management team. That is how a management team is judged, by their earnings performance, not by all the pontifications that they make or wild predictions that they make. No, it is based upon the earnings performance. I don't even care about what the stock price does in the short term, right? Can't control that. Wall Street controls that. However, your earnings performance is absolutely what matters, because the stock will always return up and match that earnings performance at some point in time in the future, or when they get way overvalued, it will fall down and match the lack of performance on the other end as well. It always comes back to that same exact deal. It's one of the few 100% certainties in the stock market. But with earnings performance like that, it tells me not only are they performing as a company, the management team is great as well. They know how to execute, not for a quarter, not for 2 quarters, not for a year, over multiple years. And additionally, with this management team, they have turned around the business. It went from a student loan provider, servicer, whatever the case is. Now that's really a small part of the business and kind of the cherry on top. If some things kind of fall their way, it's going to make them a lot of money as well, but that's a cherry. That is not what is going to carry the company forward into the future. And that is what makes their earnings performance, despite the fact they had to shift an entire business that is not easy to shift at all during a terrible, bad time, right? High inflation, down consumer getting crushed by inflation, a lot of other things of that nature. They navigated it wonderfully and have set up the company beautifully for that future. So right there, first off, earnings performance is what I care about in the end. And if I get continued earnings performance, that is how you get to continually outpace the market in regards to returns over the long run. That's the only reason why you buy individual stocks, is to outperform the market. And that right there is how a company proves that they can do it over the long term, is through that earnings performance. Number 2, the valuation will reset. Now, I know that's confusing for some of you guys, but let me kind of explain it here a little bit further. Valuation resets every single quarter, right? They produce new numbers. There's a new EPS number. And at that stage, the valuation resets based upon those new numbers. However, I also like to look out in the future, look at that forward PE and see exactly what they're going to do. And unless this management team doesn't do what they've done every single time for the past 3 years, when they put out their annual guidance, they're going to guide higher than what they guided previously, which means all of a sudden, everybody's valuation model has to be updated, right? All of a sudden, whenever I look at that forward PE, it might very well go from, that's looking a little bit rich, to, wow, that's significantly undervalued if they actually hit those marks, right? Valuation is complex. I understand it completely, guys, but it is the key to avoid overpaying in hype markets like we are right now and piling in to a great stock like SoFi in the $4 range, rinse and repeat for over a year. $4 or $5, $6, didn't matter. I knew because of valuation to pour into that. So you have to learn it. Learn it through our group, which the Fall Frenzy Sale is live right now. We show you exactly how to do it, walk you through it, step by step, courses, coaching, everything else. You can see all those buy and sell alerts too if we happen to get a great deal in SoFi. We'll talk more about it at the end. It's the pinned comment down there. But valuation is the key to being a great investor over the long run. Nothing else is. You can throw up pretty charts and graphs and everything else, laughable compared to just understanding valuation, because it's really hard to beat SoFi at $4. Look at the return versus any other chart, graph, trader thing, whatever the case is. It's not even in the ballpark of the same returns. So you got to learn it. And I do believe, unless management deviates from what they've done the past 3 years, we're going to get a valuation reset for SoFi stock. And number 3, 2026 and 2027 will be the big years. Now, once again, guys, this comes down to if you trust management or not. I trust this management team implicitly when they tell me something until they actually don't, give me what they, promise per se, right? Other stocks I own, different situation. Their CEO can say anything. Totally don't buy it. I'm just buying what the numbers are and moving on because they've been remarkably wrong or off on all estimates and everything else. Now, it doesn't mean it's not a great stock, not a great company. They're not executing or anything else of that nature. Just simply different management teams create different levels of trust. And this management team, I trust when they say, hey, don't get excited about this year. Be excited about 2026 and 2027. That's when our big years are going to come. That's when the big EPS numbers are coming or during that time. Well, that right there gets me excited that, hey, Wall Street's short-sighted. They're looking out 6 months, maybe a year, maybe or so. Maybe they're looking at 2026, maybe, but definitely not to the numbers that what the management team is hinting at whenever they say those are their big years for growth and expansion and the bottom line. So for me, that is definitely a sign that I need to continue buying this stock. But guys, there is 2 big problems with buying SoFi stock right now, or really at any point in time in its journey, okay? So you gotta understand these as well. Let's get into those next. So number 1, fintech multiple is not guaranteed. Look, guys, I love SoFi stock, okay? I believe that they are more fintech than a bank, but I don't determine that. It doesn't matter what Luke thinks. It only matters what Wall Street thinks. And if you think the multiple they're receiving right now is going to be the multiple they're going to get for all of eternity, considering they just turned profitable and they have very, very, small earnings relative to what they'll have in the future there on that EPS number, and we're also in the middle of a hot speculative market, you simply don't understand how investing works. I do not believe the multiple it's trading at right now is going to be the multiple we are going to get in the future. It doesn't mean it can't trade here for an extended period of time, especially if the market stays red hot, but it doesn't mean that's the multiple they're going to settle on long term. Unfortunately, if Wall Street decides across the board that, and all the banks, remember, there are banks out there that are doing this, all of a sudden they all say, nah, it's more of a bank. We're going to give it a multiple of a bank. That severely hurts the bull case for SoFi. Now, I personally think they're going to get some sort of a hybrid multiple. We're not going to get the high fintech that maybe we're trading at right now, but we're definitely not going to get that low traditional bank type multiple we're going to get, or that they're, could trade at if they decide to peg them as a bank. I think they're going to put them somewhere there in the middle, but right now that is to be determined. It will take years to determine that. More importantly, somebody trying to tell you this is true and this is why right now, simply not true. We won't know the actual answer to the test until much later on. And remember, Wall Street determines that in the end. So you got to understand that with this stock. I know a lot of folks out there throwing out a lot of bull cases and these crazy price targets and this crazy this and this crazy that based upon, guys, that's just part of a speculative market. You've got to learn to ignore that sort of stuff so that way you don't get crushed in the end. Number 2, it's still volatile and will be. I know it goes against the narrative once again, but this stock is still firmly trader controlled. Now, some things that will help with that in terms of taking it out of the trader's hands would be things like making the S&P, continued great earnings performance, which I have no doubt both of those things will happen at some point in time in the future. When? I don't know, and I don't freaking care. Doesn't matter to me. But I know those 2 events will help slow down some of the volatility. But volatility coming out of your stock doesn't just go, oh, hey, stock, highly volatile, trader controlled. Oh, here we are 6 months later. Not anymore. Sorry. Nope. Not. It's just going to trade like all the rest of the big tech stocks now. It's just a normal traded stock. No, that is not how it works at all. It is still trader controlled and it will be. And it's more like a gradual over time. It moves, the traders that are trading it, the shares come out of the traders' hands and over into the long-term institutional holders' hands. And remember, long-term institutional holders, looking at the percentage of how much institutional ownership you have in the stock, only tells you a little bit of the piece of pie because there's some institutional owners that are pure traders. So your quality of the actual institutional holders is what actually matters. I can assure you that the huge institutional ownership in Tesla and Apple, for example, are 2 completely different makeups. Matter of fact, I know that they are because I've gone and I've researched both. The Apple base of institutional holders is vastly different than Tesla's. And obviously that contributes to the huge volatility or lack of volatility in Apple's case in those 2 stocks. It doesn't mean they can't be volatile or anything else of that nature, but we're talking about the volatility coming out of the stock. It just takes time for SoFi to get there. Do I think they'll be there one day? Yes, because it's the exact type of company with the exact type of leadership that the buy and hold type institutional holders want in a CEO, that they want in a management team and how a company executes and the type product it is and everything else of that nature, okay? But to think it's now all of a sudden a safety stock and it's not going to be volatile and a market downturn won't take it down harder or anything else of that nature is simply not true. If the market tanks, SOFI is going to tank harder than a lot of other stocks out there that a lot of folks say, oh, it'll move the same as JP Morgan or what. Simply not true at all. It is not a safety stock. It is not where folks are going to run for safety during those times. It's going to get traded, more like a mid cap, just like what it is a mid cap there. And so you've got to understand that during a market downturn, but that's okay as an investor, guys. If that happens, I will be excited because I know exactly what SOFI's worth and the valuation and everything else. I have a plan for when that happens. And it's not to take my gains and stack up cash and time the market and all other trash like that. No, it is simply through solid fundamental investing, planning, goal setting, and everything else, which is exactly what our group is about, which is why the Fall Frenzy sale is so critical for you guys as we get into the late stages of this speculative market here. You're going to get crushed if you don't understand how to do that. If you don't have a plan, you're going to be stuck pulling up X posts and all kinds of other noise that's out there. And it's simply going to have you making emotional decisions, which is not how you win as an investor. I own a ton of shares in the $4, $5, $6 range. I mean, a ton, because I ignored all that trash and I knew exactly what I was buying. I had a plan and I executed to it. That's exactly what we teach through courses, through your free coaching, through the best 6, 7, and 8 figure Discord out there of, thousands of members doing the exact same thing that we are doing right there. Guys, there's so much involved in the group. Check out the pinned comment, see if the membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.